Hi everybody, it's Marc Champ from the Wharf Academy here. Today I'm joined by Jonathan Prince of Allica Bank. Hi Jonathan, how are you?
Hi Mark, yeah, good, thank you. Thank you for having me on.
No problem at all. It's great that you could join us. You and I have known each other for a little while now, trying to get some deals over the line with Allica Bank, because for us as brokers, we see your proposition as something that was needed in the market. So we're really glad that you guys came along. Has it been a couple of years now that Allica have been around?
Yeah, so we launched, we're just under 3 years live. We launched in basically just before all the lockdowns and general elections and all that sort of thing. I've been in the market a couple of years.
Yeah, and with regards to Allica, it's a new bank. It's come after the Challenger Bank launches, which happened, say, 2011, 2012. What was the big motivation? What was the gap that Allica were trying to fill?
Absolutely. So for us, the goal from the very first sort of seeds of our formation was to support the trading business market. So there has been phenomenal growth in the Challenger Bank market, particularly since the financial crash. A lot of those lenders have been very specialist and very focused on certain market segments, particularly commercial investors in the buy-to-let market, I think have been the best served by the challengers. We saw that there was still a gap for smaller businesses that were finding their relationship management was being squeezed out by some of the bigger high street lenders. And they really needed support from a bank that could actually get under the skin of that SME and understand what it is they do and how to support them.
Yeah, and we can really empathise with that, because we at Wharf come from a banking background. We've all, done. I think I'm the least experienced, with something like 15 years experience in high street banking, all the way up to Simon, who's got 42 years. One of the things that we really push is the relationship side, and also being able to understand what a trading business needs. And we found that the high streets just don't offer that anymore. The portfolios are for each RM are increasing massively, and they just can't look after them as well as they once could. So you guys coming along has brought something that was needed and also fits in really well with our model. So the people that you've brought into Allica, are they ex high street bank people, or are they a mixture?
Yeah, we've got a real mix. So recruiting the right people has been an absolute focus of the bank. We've always worked on the basis that technology should assist what the people can do, not replace them. So expertise and knowledge has been really key in recruitment, all the way from our sort of front customer facing teams through our underwriting team and into our servicing and in life teams. To answer your specific question, we have a mix, to be honest. Particularly most of our sales and underwriting team have at one point in their careers had a sizable stint with the high street. But equally, we're recruiting from a lot of newer, more progressive lenders. What we don't want to do is replicate the high street appetite, because then there wouldn't be a need for us. So it's finding that balance of the years of lending knowledge, but people that have been in that more commercial, more customer focused setting for a few years as well.
Yeah, I think it is important, because the high street, the people there have got so much to offer. They're so experienced. Some are a little bit institutionalized, but once they break free, they can see the wider world out there. And when we deal with you, we can see how you sit halfway in between the fintech lenders and the high street. You can still have the conversations with you guys on the high street level, but then you're not being directed to a mailbox, which is a big bugbear of mine from the fintech lenders, where you have to speak to the outset. You have to speak to an inquiries inbox, then you have to speak to a deal progression inbox, then you have to speak to a completions inbox, then an ops inbox, and it just doesn't work for me anyway. So you guys do have a happy medium, and there's always somebody on the end of the phone to discuss business rather than a transaction, if you see what I mean.
Absolutely. We consider everything as a loan, not a piece of a process or anything like that. And the quite refreshing thing I think about Allica is exactly as you say. Everything is done with that personal interaction. Brokers and customers have a dedicated business development manager or a relationship manager that they can always pick up the phone to. And even our underwriters, if they've got questions on cases, they'll go direct to an introducer. They won't try and filter everything through an internal process. So yeah, relationships really important to us.
Yeah, I think it really is. And another thing that I found frustrating about the challenger banks, especially, is the risk appetite, and not the so much what they'll lend on and what they won't lend on, but the fact that they look at it as a policy rather than what is the actual risk. So how does Allica look at that? Are you looking at each case individually and working out the risks, or is there like a tick box exercise that everything has to meet?
Absolutely. So no two deals are the same. And I think that's really well reflected by our product documentation, particularly our product guide. A lot of lenders out there have product guides that range anywhere from sort of 5 up to 15, 20 pages, because there's so many caveats, assumptions, exclusions that are trying to stop business even coming into the bank in the first place. Our product guide is 3 pages, and it pretty much just tells you what the product looks like and what our maximum LTV appetites are. We don't have hard and fast rules on a lot of things that other lenders would include in their appetite, and the reason for that is something you might want to do on one transaction, you absolutely wouldn't on the next. So for us, it really is, like I say, it's about working with good quality introducers that really understand that business and can point out factors that we might miss if we were just looking at a high level tick box exercise.
Yeah, I think it is important, and we try and package cases and give an overview in a concise way, but so it's not too long and war and peace, but also has the relevant information, because I know it can be either way. When I was working in the bank, there were brokers that would bring you a whole document pack with almost like a credit paper written, and it's just not necessary right at the start of the deal, and it's not efficient for anybody. So the moving of information between customer, broker, and lender at the outset is really important, I feel. And with somebody who's less experienced, it can cause big problems. I've literally just seen it on a case passed to me where a customer used a different broker to us, and they provided very little information to the lender. The lender's done the valuation, found something out that is fundamental, and just said, well, we can't do that. So the customer's wasted the valuation fee. But when you are in good contact with the lender, the broker and the lender, you understand the policy. And even if you may not know every detail, you understand their risk appetite and what sort of stuff they're looking for. So it does work, I think, when you've got a good BDM, you've got a broker who understands banking or risk, and a customer who will provide the information as and when is necessary.
Absolutely. A quality broker that, has either been in the industry for a very long time or come from a bank is you can't understate how important that is, because exactly as you say, they know what to pull out really early on in the transaction as a potential hurdle. And then that way you can make sure you overcome that before you start any formal process at all. and then you sort of set yourself up for the smoothest path through. So an introducer that can really advocate on behalf of their customer is a real strength.
And Allica, we spoke about the trading business side. You also do commercial investment products. Do you want to tell me a bit about the products, how they look, and what?
Yeah, absolutely. So, I think something that's really important to note is obviously we're less than 3 years in the market. We're a very young new lender, so our products evolve very, very quickly. I mean, if you go back as recent as the first quarter of this year, we had a very, very standard variable rate product. In the end of the first quarter, we launched an a fixed rate product. The market was going crazy and still is with Bank of England base rate increases, and there was real concern, particularly among investors who struggle much more to adapt their income in line with their rising costs, to have that certainty of a fixed product. And I'm pleased to say that we've very recently also just launched an interest-only version of that fixed product, which again allows landlords to really maximise the income that they're getting from their portfolio to carry on investing into it. I think interest-only is a feature, particularly for property investors, that allows them to carry on growing what is their business, the investment side of adding more properties and continuing to sort of build their empire, as it were.
Yeah, it is really important. And my clients with the largest portfolios, they want interest only. At the moment, they want fixed rates. They're not entertaining a variable rate. They just, as soon as that's put in front of them, we can't do that. That's it. That's that lender that disappears from the mix. So the fixed rates and the interest only are things that are integral to customers at the moment.
Exactly. I mean, if you take a trading business that either manufactures a product or provides a service, when they're faced with increasing costs, we all know about energy costs going up, but also particularly finance costs. They're a lot more flexible. They can adapt what they're charging for their product or service to cater for that increased need. Where if you've got a commercial property investor that's got a property on a 10-year lease, their next opportunity to increase their income isn't until that lease expires. So having that certainty on day one is really, really important.
Yeah, it is. And nobody can predict the future. Even the economists can't see what's around the corner. We expect the base rate to continue to increase. And I think there will be opportunities also for customers to pick up some bargains out there as some people struggle. And with you guys being able to move on the commercial sector, especially, I think you will do very well and you'll pick up a lot more business. So I hope that is the case for you, and you seem to be expanding all the time.
Yeah, absolutely. So as I said at the beginning, the goal for us is to become eventually a full service bank for small and medium-sized businesses. So our launch product was a commercial mortgage offering. We followed that up 12 months later with our asset finance product. But we're not stopping there. We want a business to be able to come to us and satisfy every sort of core banking need and product that they've got. So we're just in the death throes of launching our current account, and we've just started our product design team looking at effectively some sort of unsecured and asset-based lending. And we're just going to keep iterating that. We're never going to stand still in the market. We always want to keep pushing forward and looking at ways we can grow and diversify what we do, to firstly to be able to support more businesses, but also to better support the businesses that are already our customers. We want to at least give them the option of any finance they need. We can be that first point of refusal for them.
And where you say that there's going to be a current account open, I presume that'll be a business current account.
Correct. Yes.
Yeah. And would it be as easy as some of the new current accounts? Because we had a time, it's probably 6 months ago, where customers were opening limited company SPVs to buy properties, but they couldn't open a bank account. And it was a nightmare. So we turned to advising our customers to talk to the online banks. And you can get an account open in 5 minutes. Is it going to be a similar thing with you guys?
Absolutely. So everything we do around 3 core principles for us, which are, speed, being straightforward, and delivering. And that is something we apply in every product. So we will absolutely ensure that whether it's our current account, whether it's our unsecured products in future, they are seamless. We're not asking for things we don't need. We're not putting unnecessary steps in a process. And because we've got quite a large development team on the IT side, we are able to develop things like native iPhone and Android applications that mean one of these accounts could be applied for via the app in future. And yeah, we're absolutely looking to harness sort of the real modern technology that allows us to keep that process as quick as possible without sacrificing any of the sort of proper care and attention that it needs. It's still, like I say, it's still in the last stages of development. We're testing it with our first few customers at the moment, but absolutely we never launch a product with the goal of the route of getting it being terrible service.
And I think, do you know what, your system, and I'm not just saying this because you're on, the application system is the best out there in the market, I think. Lambay recently updated theirs, HGB have updated theirs, and they're pretty good. But the thing that struck me was the sign-in process. Instead of having to remember passwords or put them in a password keeper, I just get a little notification on my watch that I need to touch, and then I get in. And it's just so much easier than anything else that's out there, and it's user friendly going through the process. So it's always good when a customer says to me, let's go with Allica, because I know my life's going to be a little bit easier because of your process.
Absolutely.
So
so we are in a very fortunate position that not a lot of challengers are, where we're a little bit more on the fintech side in terms of we do develop our own proprietary software. We don't necessarily just go and buy everything off the shelf. So that means we can integrate those nice little features that just make life easier and speed everything up. Yeah,
it's head and shoulders above the appraiser's valuation system. I don't know if you've ever used that. Oh my God, I can't get my head around it. You have to do you're on the appraiser system to pay for something. Then you need to go on a Quest system. You have to move from, I use Google, move to Microsoft Edge. Then you need to update your Microsoft Edge so it looks like Internet Explorer. And it's like, oh my God, I can't believe it. It's like using an old BBC computer. It's very difficult. So it's a pleasure using the Allica application system. So I really recommend customers to choose Allica just so it makes my life easier.
Absolutely.
Yes. So we'll wrap it up there, but thank you very much for coming on. Really appreciate it.
Of course, it's been a pleasure.
We will make sure people are very much aware of Allica because we like what you're doing, and we know you guys add value and have your own little niche in the market. So, like I said, we'll wrap it up there, but thank you very much. And we will hopefully be sending some applications over to you soon.
Absolutely. Thanks a lot.
Thanks a lot. Thank you.